Hello, my name is Dominic Frisby and I've been writing about and investing in gold for nearly 20 years now. And by popular demand, here is today my guide to buying and investing in gold. How to buy gold, how to invest in gold. We're living in a world of uncertainty. There is inflation, war, political discontent, financial instability, planes flying overhead, and perhaps most concerning of all, state incompetence everywhere you look. The case for owning gold, for having wealth stored outside the system where it is nobody else's liability, is as strong as it has ever been. There's an old Wall Street adage, put 10% of your net worth in gold and hope it doesn't go up. If gold is going up, it usually means there are problems elsewhere. And the adage applies now as much as it did when it was first coined many decades ago. So, how to invest in gold? There are 5 ways. 1, you can go old school and buy bullion, coins or bars. 2, you can buy gold stored in vaults in places like London, Jersey, Zurich, Singapore, and that gold is allocated to you. It's in your name. 3, you can buy ETFs via your stockbroker, and these are funds that store gold, and the price of the fund tracks the gold price, and you own shares in the fund. 4, you can buy gold companies, refiners, royalty companies, mining companies, and so on. And 5, you can buy futures, options, CFDs, or spread bets. Now, I'm not talking today about buying mining companies. If you're interested in mining companies, please consider a paid subscription to my Substack, as gold mining companies are one of my areas of expertise. Nor am I talking about futures, CFDs, options, spread betting the gold price. Neither is safeguarding your wealth. They're speculation. In the right market, they can make you a lot of money. In the wrong market, they can also lose you a lot of money. Today, we are talking about old school, physical gold. And I'm going to put to one side arguments about whether gold is a good investment or not. I think it is. And whether I think it's going up or down. I'm simply going to explain what is the easiest, cheapest, and perhaps above all, safest way to buy gold. Now, let's talk about ETFs first. Exchange-traded funds. They're a simple way to get exposure to the gold price. It's not the same as owning actual metal, so the purists tend to veer away from ETFs, though institutions like them, as do traders. And they are an easy way to buy and sell. You buy an ETF just as you would buy any stock or share through your broker. And there's ETFs listed in London. They include RMAU.L and PHAU.L. Those are the ticker symbols. But the world's biggest is in New York on the New York Stock Exchange listed GLD. And things like costs of storage are baked into the price. You need an account with a broker, such as Hargreaves Lansdown, Interactive Investor, Interactive Broker, that kind of thing. You deposit money and you buy through them. Now, I steer away from ETFs, mainly because they are too easy to get shaken out of. When you buy physical gold, to buy or to sell can be a bit of an undertaking, so it's less likely to be done on a whim. And owning physical turns you into a long-term investor. It may be that you never sell at all and end up passing the wealth, the gold, onto your heirs. So, where do you buy gold from? I've used many bullion dealers over the years, and the dealer I like most, and I've actually got an affiliation deal with them as a result, is the Pure Gold Company. Premiums are low, quality of service is high, and you get to deal with a human being. But there are many others, Goldcore in Ireland as well, I like a lot. You can take delivery of your gold or store it online in their vaults, and this is Pure Gold I'm talking about. They deliver to the UK, US, Canada and Europe, or, as I say, you can store your gold with them in their vaults. Goldcore do that as well, and if you speak to them, either Goldcore or Pure Gold Company, tell them I sent you. In theory, there is not a great deal of difference between an ETF and storing your gold online with a bullion dealer. Both are extremely convenient, whether for buying or selling, and both give you exposure to the gold price. But I favour the storing it with a bullion dealer route, as somehow you are less likely to sell. ETFs they make it too easy to sell, and so they weaken your hands. Next question, where are you going to put your gold? So once you've decided where to buy it, the next question is, where do you put it? Different people with different circumstances have different solutions. Some people have a safe at home and they keep their gold there. Some people keep their gold in safety deposit boxes. Others never take delivery at all and they keep it safely stored in a vault with the dealer in sensible places like Zurich, Jersey, London, Singapore, those kind of places. Now, I'm not convinced homes in our vibrant British or American cities are safe. So these are not options I would take. But I do know one guy that has all his gold stored in a sock in his loft. I know another that has it buried in his garden. He's not in a city, he's in the countryside. Only his close family know the location. He has a lot of land. I know another that keeps his gold and silver in plain sight. He uses the bars as doorstops. Nuts, you may say, but how about this? He got burgled and the burglars didn't take the bars. They obviously thought they were just doorstops. So if, and only if, you have somewhere safe to store it, I am a great advocate of taking delivery. You get to handle your metal. And there are lots of fantastic different coins from around the world that you can buy. Chinese pandas, South African Krugerrands, American eagles, Austrian philharmonics, I particularly like them, Canadian maples, Australian kangaroos. Bars are nice as well. And it's good to handle gold. And a lot of people say gold is good, for your health. But I refer you to my above comment about cities today. I've even heard about homes being burgled by people with metal detectors. How about that? I gather that's mostly an Asian-on-Asian crime in areas like Southall and Hounslow. Asians know that other Asians have got gold at home. So be careful if you take delivery. Now, there's one other thing I should mention, and that is that that's tax, and this is only for UK investors. Competition amongst ETFs and bullion dealers has driven down prices, sales prices, much to the benefit of the consumer. But there is one tax you cannot avoid if you sell an enormous cost, and that is capital gains tax, 20% in the UK. But if you buy sovereigns or Britannias, they're not the nicest coins. Britannias are lovely coins, but sovereigns aren't that nice. They are technically coins of the realm, so you don't incur a capital gains tax. Sovereigns are only 22 karat gold, 92% purity. They're mixed with a little bit of copper to make them harder. But you can buy 100-year-old sovereigns, 150-year-old sovereigns for not that much above the spot price of the metal content. So you get all that history for free. So that's sovereigns, a good way of not paying tax if you don't want to. You pay a slight premium, but not that enormous given the potential savings. And it's surprising, I must say, that more investors in the UK don't buy their gold and silver in this way. Silver Britannias are free from CGT as well. So that is all. Good luck with your investments. If you have any further questions, either post them in the comments or subscribe to my Substack and message me there. Good luck with your gold, good luck with your silver, and enjoy the process of owning it as fiat money around the world collapses. Thanks very much for watching. I'll be back with another video very soon. In the meantime, please subscribe to the channel, and all the relevant links will be appearing on your screen around about now, or I will put them in the comments. Thank you very much. Until next time.